A very good afternoon, traders, and it's Stu Norpan here, founder of Master Markets A-Trades Conference and the Traders Open Day. So welcome to Forex Friday. Okay, it is the end of the week. It is the 16th of March 2018, and here we are on the synopsis of our weekly trades that we have taken here at Master Markets, and also a very exclusive topic for you guys where we give you constantly quality information. You can see over here on our current live trade that's going on is a dollar yen trade, and the dollar yen trade we are shorting at the moment. Okay, that's what we're doing. Just a very small tiny profit that we've got today as it's going down further but still pulling up a little bit. Now before I come to that and to give you an overall performance of how our trading flow is done, let's just go through a small topic for today. Now, the topic that I want to go ahead with today is the 4-bar price patterns. Now, some of you have seen us present in the various conferences that we have done over the world. You would have seen that we usually talk about segmentation of a OHLC bar. So, for example, imagine this, and we usually give this exercise to many people, is that if I give you two vertical bars like this, right? Two vertical bars like this, without the opens and closes. Now, let me explain. You see, if you look at the OHLC bar, there are 4 points to it, right? Open, close, high, and low. Now, what I'm saying is, if I take out the open, oops, I think I took out more than the open. Now, let's see. Okay, so if it begins with this, right? And if I did this, and let me just delete that, and let me just delete that. Yeah, so if I take out open and the close, you're left with just one vertical bar. And now imagine that you have two of them like this, okay, without the opens and closes. What are the different types of price bar patterns that you can form? What type of patterns can you form from this without any equal highs and closes? So no equal highs, no equal closes, okay? So no equal high and closes, okay? No equal high and low, sorry. So without this kind of pattern, but what other patterns can you form? So go ahead, give it a go if you've not seen this before. Pause the video and give that a go with a pen and paper. Okay, so I guess some of you would have given it a go. If you haven't, please do give it a go because that's the best way that you learn. Now, 4 different patterns that you can form from here. So one is like that, right? So higher highs and higher lows between the bars, yeah? And then the next one is lower lows and lower highs. And then finally, then you got an insider bar. And then after that, then you got an outsider bar. These are the only 4 ways in which the price bar patterns can happen. And for the price in the market to go either sideways or to go up or go down. These are the only ways because that's how it can move, okay? So over here, if you take a look at this will fit into the diagram. It's going into this diagram here, right? Lower lows, lower highs. If you take a look at this, then it's going to go into here, trending bars, right? So, but if you take a look at this one here, that's an insider bar here, as you can see. And then finally, then if you want to look at outsider bars, then we can find that as well. So let me see if I can find outsider bar. Now, let's see. Do we have an outsider bar that I can find that catches my eye immediately? Maybe some of you can already find it. Ah, there you go. This one here, right? So there's one here. Yeah. So that's an outsider bar here, right? So I guess you guys all get the drift. Now, so these are the 4 bar price patterns in which the market can move. So out of these 2, this is when the market is trending, so trending bars, and this is when the market is in compression, okay? Market compression, okay? And usually after a market compression, you get big moves, okay? So some things that you can design your strategies on. Now, let me carry on further. Now, if I were to then look at an individual OHLC bar, and what I'm then going to do is I'm going to relate it to this and how you can apply it using your own strategies. Now, if you look at an individual OHLC bar, you got a close and you got to open, right? Now, once you look at that, now you see open, So you got a high, and you got a low, and you got a O, and you got a C, right? Open, high, low, close. Now, of course, for those beginners who are looking at this video, of course, if you want to learn the basics and how it's all generated, and how you can use it as well, and get a good overview of the markets, please do look at our Trader Starter Pack videos. It's been made into a 5-part movie that you can learn from, and you can really get better on get a good grounding of the basics. Now, further going into detail of the OHLC bar, from here I can actually segregate this bar into 2 segments. Okay, this is what we talk about in Trader's Toolbox. So you see, from the open to the low, right? Open to the low, this point here, right? We have what we call open to the nearest extreme, right? Open to the nearest extreme is this part here, right? And then we got the bigger range as well. We got the bigger range of the bar as well. From the open. Let me just redraw that just very quickly. Now you see, the first part is the open to the nearest extreme, which is here, right? Nearest extreme is here. And the next part is the open to the larger extreme. So you see what I've done, I've segmented the bar into 2 sections at the moment. Is that right? Yeah. So that's what I've done at the moment. So over here, which is the open to the nearest extreme, is what technically we call the stretch. Okay, this was introduced by Toby Crable. And then the final thing, what we then call over here, is that we have called it the bigger range from the open. So bro, as some of our traders call it, yeah, like high bro, yeah. We're not going to get into that lingo here, but I think just for abbreviation purposes, you can see that this is bro, B-R-O, bigger range from open, and this is a stretch. This is the nearest extreme from the open, all right? So now we have segmented the bar into 2 sections. Now, how is this helpful to you? You can, of course, run your own stats on what is the usual pip size of a stretch and relate it to ATR and all that. These are the kind of results that we share with our clients, because we are continuously running research studies on the market. But once you have found that, let's say the stretch is now 30 pips, let's say, right? Now, how is this then useful? This is particularly very useful for designing your stop losses, even when you're doing end of day trading or intraday trading. What you can see is then you can fit this into these 4 diagrams, right? Think about this. So if you got a bar if you got 2 bars like this, and the next day hasn't formed yet, and let's say it's closed over here, right? So what I can do, if I'm projecting for the trend to carry on the upside, then I can place a very tight stop from here to here of 30 pips, is it not? If I find out that 30 pips is the average standard pips for stretch point, okay? So then I can basically place my stop loss 30 pips away from the open, and I can just place it just over there so that I don't get hit by the volatility. But of course, this kind of trading is for bar by bar trading. Okay, it's for bar by bar trading, and you have to do that only if you know how to segment price according to each individual bar. And that's what we do actually, and that's how we design strategies called prime profits and gold bars. All right, so that's how we do that. So definitely have to think about it on what I've taught you over here. And the BRO can be used for target purposes as well. Okay, target purposes. Okay, so stop loss and target, if you know the segment is out, if you run the stats and then use it according to then this bar patterns that we've taught you in these 4 types of bar patterns, it can help you as well. Also for insider bar is very helpful as well, because the next bar still has got to respect this categorization that I've taught you over here, which is over stretch and the BRO. Okay, right, great. So that wraps up our topic for today in the Forex Friday. So I went through the 4 bar price patterns, which is here, and then we went through the individual bar segmentation and application of how you can apply that studies that you have done on the stretch and the bro on the stop loss and target purposes. Now, moving on into our performance for this week. Our performance for this week, let me just show you that in terms of our elite journal. Remember, this is all just our performance alone that we are tracking. This is not as a signal service, because we are purely educational over here. Now, as you can see over here, In terms of smart money trades which based on weekly and daily correlations, no trades at all. Swing profits, which is based on bar by bar until confirmation or swing low or swing high, no trades as well this week. And then we finally got prime profits. Prime profits, we did take a cable trade. We took a minus 1% hit on that. Very, very small, tight risk over here. As you can see, 22 pips of risk going for 173 pips of profit, 7.86%. You can see that there was a minus 1 over there. Remember that in this strategy, it's got its own statistical edge over here, where it's a 50-50, where we'll take 5 hits and 5 profits. But as you can see, when the 5 profits really hit it, it takes it to a really, really new, very high equity level point. Now, in terms of LTM advanced strategies, you can see over here the only trade that we only had is liftoff 3.0 over here. And you can see that over here on the 13th of March this week, we took a 0.03 small profit. Okay, as you can see, all our profits are very tight. Once in a while, yes, we will get a 1% hit, but other than that, we keep it really small so that when the big runners come through, then it takes you to new equity highs. Okay, so that's what we are looking at right now. So what are we up or down by for this week? Minus 1% from Elite, plus 0.03% from Liftoff. So overall, what do we have is a minus 0.97. Minus 0.97 is what we have for the total 5 strategies that we run over here. Okay, right. So that's that from us for this week. As you know, most of our strategies are very high quality, looking at high quality setups, low frequency, but then we populate it over different strategies so that we get the frequency that is necessary as well. Okay, because at the end of the day, what we want to focus on is high quality setups, which then puts money in your pocket and creates for you consistent profits. That's what we are looking to do over here. That's what we're looking to share with other people in terms of educational perspective. Okay, that wraps up the Forex Friday for today. I believe this has been useful. Any other questions, always do contact us. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.